Hi, I'm Phoebe Greening, Director of MJ Accountants, and I'd like to welcome you to another edition of our MJ Accountants Essential Updates. Is paying tax a good thing? I'm going to be a little bit controversial here and say that yes, I believe paying tax is a good thing. Why, you might ask? Well, if you're a business owner and you're paying tax for your business, it actually means you've made a profit. Therefore, the bigger the tax check you're writing to the tax office, the more profit you've made and the more successful you are. However, if you've not planned for the tax that you may have to pay from your business, this could be very detrimental to your business success and cash flow position. And as cash is king, you need to make sure that you've got enough cash set aside to meet your tax obligations and tax deadlines. Planning for your tax liabilities throughout the year is key to your business success, and probably the number one cash resource you need to set aside to enable you to meet the tax office deadlines when they fall due. Now, I'm all for minimising tax and implementing smart strategies to help minimise your tax, such as better business structures that can help you to minimise your taxable income, and bringing forward certain expenses that you incur throughout the year so that you can claim them in this financial year. Looking at superannuation possibly is a strategy, but you need to speak with a financial advisor regarding this, and also trying to postpone income to the next financial year. So making sure that you've got smart tax minimisation strategies in place to help minimise your tax legally is very important. However, often my clients come to me at the end of the year and say, I'm really worried about the tax bill I'm going to have to pay. I need to go out and buy something to reduce my tax. And I try to explain them that this is really quite a crazy tax strategy because, for example, if you don't need that expense for your business, you're really just wasting money. And if you say, for example, you want to buy a car, by paying for the car before the end of 30 June doesn't mean you're going to get that car payment 100% as a deduction because cars are an asset and they need to be depreciated over the lifespan of the vehicle. Also, by going out and spending money unnecessarily, you really are just hurting your business, not really helping it at all. And this is because, say for example, you spend $1,000 on a deduction that you don't necessarily need for the business. You really, if your tax rate is 30%, you're really only saving $300 in tax, and you're still out of pocket for $700 that this expense cost your business. So going out and just buying things that you believe your business needs really is a crazy strategy for tax minimisation. I highly recommend that you speak with a tax accountant and implement smart strategies to minimise your tax legally, but not just to waste money to try and reduce your taxable income. So the number one KPI for your business should be the bigger the tax check that you write to the tax office, the more successful you've been, as long as you've implemented cash flow strategies to ensure you can meet the liabilities when they fall due, and you do work on some smart tax minimisation strategies to help reduce your tax legally. I'm Phoebe Greening from MJ Accountants, and we can help you with these type of strategies to ensure that your business is successful. And we're your partners in innovative accounting solutions, business growth strategies, and wealth creation.